Hey folks, see Rachana Ranade here and I welcome you all to a very interesting video wherein we are going to discuss about an NBFC. Well, the name of the company is Capri Global Capital Ltd. But what are we going to learn in today's video? We are going to understand what is an NBFC. We'll talk about what does the company do. We'll talk about the segmental yields, the key financial metrics, Q4 results update, asset quality, management commentary, technical analysis, basically a lot of information packed in a single video. So without any further ado, let's get started. Now let's get started with the basics and let's understand what an NBFC is. According to the definition, as per RBI, NBFCs are financial institutions that are primarily engaged in activities. Which activities? Such as providing loans and advances, acquiring securities, it could be leasing, hire purchase, and similar financial services. Okay, simple. But now that we understand what are the different services, we also have to understand why are NBFCs important. They are the ones that help bridge the credit gap by providing loans to underserved and underbanked customers. They contribute to financial inclusion, they support employment generation, they support financial infrastructure and transportation, and also play a very important role in the overall economic growth. Now that you have understood what NBFCs are, what purpose do they serve, we also need to understand how do they actually operate, right? Now, typically, they borrow funds through banks and bond market at floating interest rates, and they lend this money to at what rate? At fixed rates above the borrowing cost. So basically, just to repeat one more time, they borrow at a floating rate and they're going to lend at what? They're going to lend at a fixed rate, and obviously they are going to do that above the borrowing cost. Now, the difference between the borrowing cost and the lending rate forms an important part of their earnings, right? So I hope basics are absolutely clear. In the next section, we'll talk about Capri Global Capital Limited. Let me ask you something. Imagine two companies are trading exactly at 200 rupees. Which one will you buy? If your answer is that the share price alone doesn't tell me anything, you are thinking in the right direction. Because successful investing isn't about looking at stock prices, it's about buying good businesses. Well, in my course on fundamental analysis, I will teach you how to identify quality businesses and how AI can help you research them in a fraction of the time, all explained in simple language. If this is a skill you would like to build, then visit my website www.rachanaranade.in or check the pinned comment for more details. Now let's understand more about Capri Global Capital Limited. We are going to understand three major points. Number one, what is the primary business of this company? Number two, of course, you understand that this being an NBFC, it's going to give loans, and which types of loans are given by this company is what we'll understand. Number three, of course, they are not going to print money and give this loans. They are going to borrow the money from some source. So which is the primary source of their borrowing? All these things is what we'll understand in this section, right? So first, let's get started. Capri Global is a diversified retail focused NBFC. Now, in retail also, is there any specific target segment? Yes, they provide credit access to underserved and underbanked customers across India, right? This company operates across multiple lending segments, including MSME loans, gold loans, construction finance, affordable housing, finance through Capri Global Housing Finance Limited, and also a fee-based segment like car loan distributions through partnerships with banks and also insurance distribution, right? So now that you've understood that they give multiple types of loans, the ones that we discussed right now, be it MSME, gold, or whatever, housing finance, all these loans are given by them, agreed. But question is that how does the company fund its own lending operations? Now, if I were to talk about back in 2022, nearly 75% of its funding came from banks. That was pretty much lopsided in the favor of banks. But by FY 2026, that figure had reduced to around 55%, while co-lending had increased to nearly one-fourth of the funding mix. So at the same time, what has happened is that the overall funding has significantly expanded around 4,900 crores to nearly 31,900 crores. What does this indicate? This indicates that the company has diversified its funding sources rather than relying on a single channel. Now let's move on with the financials. But now that you understand that this is an NBFC, first things first, we have to understand how much is their AUM, right? Higher the better is a very basic thumb rule in this case, right? This company's consolidated assets under management, that is AUM, grew by 60% year on year to over 36,600 crores. Now, one important trend is the increasing contribution of gold loans. Gold loans accounted for around 35% of the loan book a year ago and now have increased to over 46%, making it company's largest lending segment. Now, the gold loan franchise also maintains an average AUM of around 17 crores per branch that highlights the strong branch productivity. Now, over the last 4 years, the gold loan portfolio has grown at a CAGR of 147%, making it one of the company's fastest growing lending segments. Now, we have to look at the yields as well, because yes, agreed, AUM is growing good. If you also check that gold loan as a segment is growing, agreed, but how much yields are being generated, that is also very important. So we have to understand about the yields from different segments, right? Now, first, if I were to talk about MSME loans generated a yield of around 16.7%. Gold loans earned around 17.8%. Retail construction finance generated approximately 17.7%, and affordable housing, of course, that being a relatively lower segment, a lower risk segment, earned yields of around 13.2%. Well, now that we have understood about the loan book, let's move on to the financial performance. FY26 was a strong year for the company, and for a very specific reason. I told you about AUM. AUM increased by 60%, and not only AUM, the net interest income also grew by 50%. Non-interest income grew by 71%. Now, operating expenses increased by roughly 28%, primarily due to investment in technology, the branch expansion, and employees. These investments have in fact led to improved cost efficiency, with the cost to income ratio declining from 66.7% in FY24 to 49.4% in FY26. Now, along with this strong income growth, this contributed to operating profit increased by 97%, while PAT grew by 98%. Now, the cost to income ratio improved from around 60% to below 50%. Return on equity increased to 16.5%, while return on assets improved to 3.5%. Well, if you have already done my course on fundamental analysis, the moment I'm telling you all these numbers, I'm sure you almost all of you should have understood the interpretation of that. If yes, fantastic. Now, whenever I'm talking about NBFCs, one point apart from AUM, apart from interest, income, margins, expansion, or profitability, all these things are important, agreed. But what is again extremely important is the asset quality. Because if they are giving loans and if they are not able to, if their customers are not able to repay, that will lead to higher NPAs. And that is the reason why we have to look at the asset quality. Everyone knows again, GNPA, NNPA, both lower the better, right? If I'm talking about net NPAs, they declined from around 0.9% to 0.5%. Now, across business segments, gold loan NPAs remained low and they also continued to improve. Housing finance also showed an improvement. Construction finance also maintained a healthy asset quality, and MSME loans continued to have the highest NPAs amongst all segments, although the portfolio remained stable. Now, overall, the company growth has been accompanied by disciplined underwriting and improving asset quality. Well, now that we know so much, in the next section, we'll talk about the Q4 updates. Now, let's move on with the Q4 updates of the company. Net interest income, that is NII, increased by 56% year on year, while net total income grew by 50% year on year during Q4. The non-interest income maintained strong momentum that registered a growth of 36% on a year-on-year basis. Now, if I were to talk about PAT increased by 59% YOY, reflecting strong earnings momentum during this quarter. Talking about the overall, pointers that were given in the Q4, what I could understand is there is a continued focus on productivity improvements and technology implementation that contributed to better cost efficiency. I also found that yes, there is a margin expansion, there's a disciplined cost control and prudent risk management that continue to support profitable growth. So these are some basic pointers about the Q4 updates. In the next section, we'll talk about management commentary. Well, now going through the management commentary, it is very easy, by the way, because with AI, now you can actually run 50-pager, 60-pager management con call transcripts and get the results in less than few minutes, right? So if I were to go through the management commentary, what I found is that the blended yield across the loan book stood at around 16.3%, while the spread on net advances was approximately 7.1%. That was supported by a higher share of high yield products and lower funding costs. So yields sorted. Second thing, if you remember, I talked about gold loan and that being an important part of their whole loan book. Gold loans now account for around 46% of the total loan book, and management expects this to increase to nearly 50%. In fact, management has also mentioned that the company maintains a conservative loan to value ratio of around 66% in its gold loan portfolio. Now, this is about the key numbers, agreed. But what about the overall expansion, overall distribution? Capri expanded its network to 1,429 locations during the year and added more than 300 branches. So, okay, distribution is also sorted. But what about gross stage 3 assets? We have to understand. So, stage 3 assets basically, which are nothing but loans that could go as bad assets, okay, as bad loans. So we need to understand two figures: stage 3 and net stage 3, right? So gross stage 3 assets improved from 1.2% in Q3 FY26 to 0.9% in Q4 FY26. Even if I'm talking about net stage 3 assets, that improved from 0.7% to 0.5% during the same period. Now, looking ahead, management has given clear guidance for the next few years, which is again very important in whenever you are understanding any company. If I'm talking about the AUM, they are targeting an AUM of around 46,000 crore in FY27. With FY28, they have revised the target to 57,000 crore. That implies an overall growth rate of around 25% annually. For profitability guidance, the management has set a target of around 4% on ROA and at least 16% on ROE. Now, talking about business segments, MSME loans, they are expecting to grow at 20 to 25%. Construction finance and housing finance and gold loans, they are expecting to grow at 25 to 30% over the next 2 years. And in fact, management has also said that they expect gold loans to account for around 50% of the overall AUM, again highlighting the segment's growing importance in the company's overall business mix. Well, I hope the overall management con call highlights are also clear. In the next section, we'll talk about technical analysis. Well, now let's understand about the technical analysis. I'm on a weekly chart right now, and you can see that there are some big volume spikes here. You can see in the month of March, there was a big volume spike. Here also, you can see in the month of June 25, there was a big volume spike. And overall, you can see all the chiller volumes, and achanak, you can see 2, 3 important towers. And then the overall volume also, you can see here. If I were to even zoom this in, you can see that yes, the volume is a little bit more as compared to what we have seen in the past, right? So again, if you know about this, more volume is equal to more and more shares are being bought and sold in the market. So if that is about the action in the market, what about price in the market? We have to understand what could be the support zones. Oh, by the way, you might be like, which date has Rachana taken? Last date we can see is 1st of June 26. We are in the month of July right now. In that case, how come the 3 months gap is not met? There is a notification by SEBI. Now it says that 3 months gap is now no more required. Even a 1 month gap is okay if you are calling yourself as a finance educator, which I am, and that is the reason why I'm following it to the T. I'm not showing you the latest data now with a 1 month time lag. I'm showing you the data. Okay, so understand how is the analysis to be done for technical analysis. Always try and first find out what are the support zones. You can see here the stock fell, it took a support, went up, again took a support, went up, again took a support here. So this is a long term support that we can see. This is what, this is back in March 23. Okay, now is there any line that I can draw at a resistance level? I'm just drawing this. I'm joining in the nice, I'm joining the highs in this case. So immediate previous high is what I've taken. So this is like a triangle pattern. If you see here, I'll just take this a little bit forward so that you can also understand. You can very clearly see the triangle which is already broken out. The stock has moved out of this triangle. Question is that does this sustain or not? Okay, so you have to check what has happened in the immediate previous month. Has it sustained this breakout, or has it come back inside the triangle? You have to just tell that me in the comment section. Outside the triangle, you can just write outside or inside, and I'll understand whether you have properly understood the technical analysis or not. One more thing that you can do is you can also check the overall exponential moving averages. If I were to just quickly check, let me check the weekly moving averages. 150 DEMA, 200 DEMA, both are important. That gets converted into a 30 weeks moving average and a 40 weeks moving average. As at least June 26, the stock is above both these key moving averages. So I think this is more or less about the technical analysis. I hope you enjoyed understanding right from what does the company do. We understood the loan book, we understood about the overall NPAs, we understood about what are the management plans. The basic management guidance is what we understood. We understood the technical analysis. So I hope you found a lot of value in today's video. If you did, please don't forget to smash the like button. Please don't forget to share this video with your friends. I'll see you in the next one. Until then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.